On Monday, we had a so-called reversal day in the market. I'd like to take a minute to go through where we saw those and why those are important from a risk management perspective and to find other opportunities. So let's have a look at a few parts of the market where we saw those reversals. First of all, question, of course, always, how do you actually find this surge, right? So what we like to do is we like to use what's called our market rover, and this is our dashboard that we use to really track the market, to find opportunities, both on a trading perspective and from an investing perspective. And so we break the markets down into sectors, into industry groups, and even thematic ideas, and of course individual stocks after that. But you can see, for example, if I just look at our sector ETFs, this is the S&P 500 sectors, and you look at, for example, communication stocks, the XLC, they remain bullish trend. That's all good. But you will notice that we had an outside reversal down day, 2% on Monday. Financials too, which remain bullish, and you can see this signal has been working. We had a nice 1.4% down day on Monday. On an individual stock basis, now that we have this, we'll start finding a whole lot more individual stocks that had similar type of price action or maybe more excessive. So you look at something like Palantir, which has been a very, very bullish stock for lots of people that are chasing stocks. At some point, the stock was up 6%, ended up the day down 5%, right? And I'm sure lots of people will say they nailed the top. That always happens in these kinds of stocks, at least that's what's being claimed. But these reversal days are important to follow. We could look at something like mid-cap stocks, right? So this is the mid-cap growth stocks. You can see they had a very clear outside reversal day. It's all happening on the same day. Or Take-Two Interactive. Again, these are all rhyme. These are all somewhat related, these things. You can see down, actually not that much, but way off the highs. Or even APO, this is Apollo Global Management. The stock at some point was up as much as, let's see, 6.5%, closed the day down 3%. Now, the reason why this is important, it's from a risk management perspective. So let's say, let's just go to Palantir, because I think that's a name that a lot of people are watching. Obviously, hell of a story. Very expensive stock in terms of its fundamentals. I realize people don't care until they lose a lot of money in it. However, we now have a risk management level, which means, as a contrarian, one might go in and say, okay, I think the stock's overbought. I have a very clear level I can trade against, whether that's, buying put spreads or something we like to do is options, credit spread, bear call spreads. We know up there, this is where there was a lot of resistance. And so if the market were to overcome that again, then clearly the market's back in bull mode. Until then, we have a very clear level where we know now that not just in this stock, but across all the different things I just talked about, all those different tickers, there clearly is some level of resistance, meaning some happy sellers up there, some people who were happy to sell and reduce their positions. So I think this is an important thing to understand. What's a reversal day? Why does it matter? Hopefully this was helpful, and we'll see you again in the next video.